Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. This is going to be your daily cryptocurrency market update vid. We have got a lot to go through. Last week was probably one of the most chaotic weeks that I have ever been through in the cryptocurrency market. And is the panic over? That's really a question that we're going to be trying to ask and answer in this video. We're going to be hearing from or looking at some of the remarks from CZ, Elon Musk, Crypto.com. And also really starting with the fact that we saw a record outflow in regards to people withdrawing their coins from exchanges. This, of course, was in light of the FTX hack, where people, of course, have been devastated and lost lots of money. People didn't want the same thing to happen on their exchange. So they are now practicing self-custody, which is a fundamental principle, I think, of the cryptocurrency market. Be your own bank. We will look at the price. We'll also look at the traditional markets because remember, we are still in a macroeconomic storm. We saw the dollar collapse. Bitcoin did not appreciate from this. And this, was, of course, was on the back of the lower CPI print. We saw the stock market do very, very well. And we even saw the likes of the UK market do well. And this was all on the back of a weak dollar. The problem is I believe that the dollar potentially is going to do a similar thing to what it did over here. And we may see a reassertion in these crazy times. Let's take a look at the traditional markets to kick things off. The Asian markets are marginally down, but we've got the Hang Seng, which is up today. Asian markets have been getting hammered recently, so it's natural to get some sort of a pullback. We've got the dollar, which is popping its head back up. However, very insignificant given the sell-off that we've seen, but it may be a good day for the dollar, which may be a bad day for the risk on asset class. We're seeing gold take a little bit of a break after a storming week. Remember, this is all on the back end of a weak dollar, which was caused by the lower CPI print, factoring in interest rate hikes, and essentially we lost about 50 basis points. We can see the stock market did very well, and of course, crypto did not follow. And the result of this, or the reason for this, was indeed to do with FTX. It's an insane thing that's happened, guys. We're going to be talking about this for years to come. I'm just glad to be here sharing it and reporting it with you guys. The futures market is currently down. Forgive me, guys. I should have maybe put the eye on here, get rid of all my draws. But very marginally. So it's going to be a very interesting open because if we have a down day on the futures market, we're seeing gold already sell off. We're seeing the dollar go up. You know, that is all the recipe for further downside for the crypto space. You guys know that I've said, look, you've got to be very careful jumping in here and buying the dip because, and we'll just get the TA out of the way, guys, before we get into some of the news, because this looks very similar to sort of here. Have we got any draws on here? No, not really. You know, you could potentially be in this kind of a pause period before you get that further continuation. I don't really want to spend too much time going over this because we've already done it. And of course, I covered it with my Patreons yesterday. But, you know, you could essentially just be here before we have a real fallout. And we reminded people that, you know, if we go back to the lunar spill, it took a little while for it to kind of ripple through the market. You know, it really started this leg, but, you know, took a while to play out. And I think with the FTX saga, potentially you're looking at a similar thing. We don't quite know the full extent. And my worry for people buying here, going, oh, you know, buy the dip, which this article actually tries to say that people are doing, and maybe they are, maybe they're not. I don't know how they can say that when we saw record outflows of people taking their crypto off exchanges. I don't really think this is a dip that's being massively bought up. I don't really like using Binance's volume, but you can see, I don't want to use Binance's volume. Who's this? Coinbase, actually. Coinbase is all right. Binance's volume's skewed, by the way. If you're looking at Binance's volume to try and predict, you know, the sort of strength of these moves, it's kind of skewed because obviously they have free trading. But you can see that volume is actually going down here. So when you get all these people going, oh, they're buying the dip, the institutions are pouring in. Not necessarily, guys. It's a good thing that we've seen a bit of a spike in volume as we've made this up move, but this is weak volume. This is not institutions buying your volume. You'd be seeing volume do the opposite of what it's currently doing. So dismiss the notion that institutions are buying here. Again, I really want to stress the fact that, you know, potentially you're doing a similar thing to what you did here before you rolled. You know, you're having this kind of pause. You've had this kind of stab up. I do think, though, from a trading point of view, you know, this setup's nice. Where are we, guys? So I think there's the argument to be made for both the long and the short setup today. But in terms of a double bottom, let's just widen this out. You know, this actually, I think you will get traders that will take that. So maybe you get some sort of continuation before you get that further capitulation down. Or it could be on news, could be on anything. We just don't know. So we're currently just going to have to scalp the market. If anybody wants to trade with me, guys, you're welcome to join my Patreon. We do try and trade every day. We're just really going to try grinding out the account and just essentially scalping at the moment, not looking for any swing trades. But it's not that clear cut this morning. But we'll see how the traditional markets open. Like I say, we do have forewarning from the futures, how gold's acting and the dollar, that potentially it could be a bit of a down day. And they have had a pretty epic run, if you will, and are potentially running into some levels of support that may now act as resistance. So there may be a contagion with the cryptocurrency market seeing a little bit of a down day today, given how other markets have opened up. So it's going to be a very, very interesting day. Again, I just want to stress that we're not buying here. We don't have any intentions of buying here. You know, ultimately, I think this thing is going to take a while to play out. And I think regardless of what we saw last week, even though it's extremely relevant, we are still in a macro nightmare that I think gets worse. I don't think people quite realize that, you know, this concept of liquidity that we keep banging on about. The problem you've got is if you have $100 trillion, that $100 trillion, like water, would have flown into all these crevices and you know, vessels. Well, there's been a reshaping of that with interest rate rises. These people that say interest rate rises don't affect the markets, I mean, you just want to bang your head against the wall when you hear this sort of stuff, you know, especially from some of these individuals that have been in markets for years. You've got to wonder how they ever survived. But, you know, we've had this reshuffling and this concept of liquidity, this concept of money is now flowing back to the debt markets. That's going to continue and is actually going to accelerate, certainly as we see, I think we see a record number of people going from a fixed mortgage to a variable coming up this year. So it's going to be very, very interesting. So that's really the TA that we've got for you on Bitcoin. You know, if the traditional market slide, Bitcoin may follow, but there's also definitely a long setup there, I think. So it's very 50-50. If you're going to trade this, just make sure you got tight stops and don't look for anything too major, because even with a long, it's very shaky. We don't know what's going to come out. We saw, of course, crypto.com get absolutely hammered over the weekend. This, of course, was as a result of the speculation. You know, they accidentally, how you do that, sent, I think it was 320,000 Bitcoin to Gate.io, and then there was lots of sort of rumors about, you know, Gate.io and Huobi borrowing funds to get a screenshot to prove their solvency and all this sort of stuff. Lots of shenanigans going on. Of course, this is all in light of the FTX situation. And panic is contagious. But this, of course, led to, following the collapse of FTX, Bitcoin investors have been withdrawing coins to self-custody at a historic rate of 106 BTC a month. This compares with only 3 other times. April 2020, which of course was the spill that we saw from March 2020, November 2020, and July 2022. And it doesn't really, you know, it's certainly comparable. It's not the worst thing that we've seen, but this is just Bitcoin. There'll be, I think, a lot of altcoins would have been taken off. And this is, it's kind of good that, like my issue yesterday when we reported on this was it kind of causes a bank run. I'm going to do a very interesting video with some of my thoughts on, if you look at how central banks came about, is the crypto space going through a similar thing? You know, very thought-provoking. And was FTX maybe a Trojan horse to bring everybody under the same roof and regulatory scrutiny and jurisdiction? Maybe I'll make a video on that just with some thoughts. Sometimes I like to do videos where I just ramble on. But yeah, so my issue really was that maybe this was going to cause a bank run on the likes of Crow, with everyone withdraws, and then they find you know, all of a sudden they a couple of million or billions missing that they can't pay out, and this is kind of what happened with FTX. But we will see. You know, for me, I can't help but feel like this isn't over, and that there's going to be, yeah, okay, it's not a bad setup from a trader's point of view, actually, to take the long here. You know where your stop is. You've got a bit of a wide stop now. You could also argue the short, actually, you've not really technically broken structure. So it's going to be an interesting day for a trading point of view. If you're unsure, just wait for some direction. We're currently in trades at the moment. Let's move on to a little bit of Binance and CZ news. CZ has really, you know, came out victorious in all this. And I have to question, you know, was CZ the straw that broke the camel's back with that FTT tweet? And, you know, did he know that was going to be effect? Was he given an early warning? You know, what was kind of going on with all that? You know, very interesting stuff. To reduce further cascading negative effects of FTX, Binance is forming an industry recovery fund to help projects who are otherwise strong but in a liquidity crisis. More details to come soon. In the meantime, please contact Binance Labs if you think you're qualified. Also, welcome other industry players with cash who want to co-invest. Crypto is not going away. We are still here. Let's rebuild. Absolutely. I totally agree with this. And I think that it's going to be all the stronger for this, having gone through it. But there is, of course, a lot of damage. You know, I know people personally that used to trade on or did trade on FTX that are now, you know, feeling the heat, I guess. This was an article. I actually found this kind of disingenuous. Elon Musk says BTC will make it. 5 things to know about Bitcoin this week. Bitcoin may be bruised, but big names are keeping the faith as data shows investors have seized the chance to buy the dip. Really? You know, this is the thing. The look at that volume. Where's the investors? You know, this is the media, ladies and gentlemen. They can literally tell the masses whatever the hell they want, and they get no repercussions. And they're saying exchange total outflow is really showing this. This must be big investors that are buying and taking their. Have they had their head buried in the sand the last week or the last, you know, couple of days with everything going on with crypto.com and all the fears about, you know, exchanges and this and that? Huge discrepancy actually between how Binance are working out their chart. But anyway, let me focus on the topic at hand. I just don't understand how media has got no accountability for saying, you know, that big investors are buying the dip here and you know, the dip is getting bought up and this should make you bullish. Because if you look at the volume doesn't lie to you guys. Yeah, it can be misconstrued. You'll notice a higher volume on the likes of Binance than you will Coinbase. They're free trading, but the patterns are the same. If your investors were buying, you wouldn't see this decline in volume. You'd see, there we go. You'd see the opposite. You'd see something like this in terms of volume. And then you'd be set. You're not seeing, ignore this, just because Elon Musk says that, you know, crypto will make it. We all know that. It's so bloody obvious. You know, I just don't really get it. And of course, people will buy the dips because they've been buying the dips the whole way down because they follow this YouTuber or that YouTuber. And they've been wrecked every single time. And this is what we're trying to avoid on this channel is, you know, more than anything, we want to keep you guys safe. We want to make sure your investment part stays relatively healthy. And you know, we've got that relatively right this year. Doesn't mean we're going to continue to be right. We can always be wrong, and you've got to accept that as a trader, as an investor. But we have actually really, you know, it's been a very chaotic week. We've largely avoided it. And if anything, actually profited from last week. And people go, oh, how dare you profit from other people's pain? No, not at all. We're not profiting from other people's pain. We're profiting from having a, you know, good understanding of this market and placing our bets accordingly. And that's that. We also had some news from Crypto.com. Crypto.com CEO dismisses speculation of financial trouble, says FTX exposure is minimal. So they still had exposure. We're finding out now the amount of companies, pensions, all sorts exposed to FTX is just insane. In live question session, Chris, not going to try and say his second name, said the company balance sheet is strong. So potentially this is just all FUD with Crow and Crypto.com. However, I think it is better safe than sorry. And certainly if you're a Crypto.com holder. I had people commenting on yesterday's video saying, oh, you're FUDing Crypto.com. No, not at all. We're just reporting on it. I have no vested interest. I'm not short Crow or anything. You know, I have no vested interest in the failure. And in actual fact, I have more of an interest in the succession of companies involved in our space than I do the failure. I think people genuinely don't understand the fact that I really care about the crypto industry. It has been my life for the last 5 years, as sad as that sounds. And yesterday, even though it wasn't particularly a hard time for me or my community, it's still not a nice thing to watch. People get absolutely decimated and destroyed, and their lives getting shaken upside down. You know, the amount of big accounts that were exposed to FTX is insane. I know personally people that lost a lot of money as a result of that because they chose FTX as a trustworthy, you know, Sam Bankman involved with all the big boys. You know, we can trust that exchange, only for them to get shaken up. And it really, if you know, there's silver linings to this. But there's unfortunately a lot of pain that's sort of been taken over. So Crypto.com is essentially saying they only had 10 million dollars in exposure out of 100 million that they're potentially given to them, and they managed to recoup most of it, whatever it was, 90 million or whatever. But we'll see. My gut feeling is we're not out of the woods yet. Okay, let's see how the US market opens up, and let's see. You know, for me, I don't think that the stock market's bottomed. I don't think markets and the economy is generally bottomed in general. Yes, you're getting a rally here. People get very too aggressively short, and this really triggers things. And then there's a direction trend traders follow, so on and so forth. I think being a trader really helps you get a grasp of the markets, because you can kind of predict, you know, the direction, looking at things, and you can understand why things do what they do. You know, why do we have such harsh rallies in a bear market? Well, it's because people get too overly aggressive short, because they don't know what they're doing. This is why 90+% of people that are involved in markets end up losing money. And it actually is the same for investors. You know, most investors actually lose money over a long enough period of time. We're going to try and keep you on the right side of that, guys. That's really all I've got for you in this video. Lots of things going on. But yeah, on that note, I'm going to love and leave you. Have a wonderful Monday, and I'll catch you all in the next YouTube video, guys. Stay tuned.